Hello, Alex once again here for Chapter 6 of Cost Accounting. So this is Process Cost Accounting, Additional Procedures, Accounting for Joint Products and Byproducts. So Chapter 6 illustrates process cost accounting when materials, labor, and overhead are applied uniformly during the period. So additional topics covered in this chapter include accounting for units lost, gained during production, assigning costs to inventories, using first in, first out. We're not going to be doing any first in, first out because you probably won't be. I know. Well, in our class, we don't get tested. We didn't get tested on that one, just for the average costing method, and accounting for joint products and byproducts. So in industries that use continuous production systems, materials may be put into production in varying quantities and at different points in the processing cycle. So basically, this is a lot like Chapter 5, but now you're going to be introducing items into the production based off of different points. So like materials, it'll say materials, 60% of materials are added at the beginning of the process, and then once production has been one half completed, the other 40 are added. So you're going to have different cost, you're going to have different units, equivalent units of production based on that. So basically, I'm gonna do the problem 1 for you, exercise 1, tomorrow. But for now, just talking about it, it's like materials sometimes are added at different points of production, and labor and overhead can also be done as well. A lot of problems though will say labor and overhead are added evenly throughout the whole process, which means if they're 1/5 complete, they're 1/5 complete. But materials can be added either all at the beginning, which means if the units at the end of the period are 1/5 complete, they're 100% complete as to materials. Now if materials are added at the end, unless the ending units are 100% complete, there's no materials in there, because you don't add them until the end of the conveyor belt, which before, if they're added at the beginning, they're added right at the beginning of the conveyor belt. And then you also have in between where, depending on how completed they are, that also means how much of the materials they have at the moment. So we touched on that one, just talking about it. Losses, normal losses, there's no special accounting for them. They're just considered to be absorbed into the products that are completed. Losses that are normal are expected to happen. So maybe you make 10,000 cookies, but you only have 9,000 at the end because 1,000 just get damaged. You're gonna have some defective when you bake them, when you roll them out, you bake them. Some of them might not pass the quality test, so you're gonna have some normal losses. That's all right. Now, abnormal losses, which usually are a large amount, that happen because of inadequate maintenance. The machine operator made an error. Those ones you're going to account for. So you actually will have you'll debit the loss from spoilage, and you'll credit the units. You'll credit the work in process. So that you'll account for if it's abnormal. I'm not going to go over first in, first out because in our class we only did average. But first in, first out, you can definitely do, but I'm not going to go into that, because if you're not going to be tested on it, it's not a big deal. And then for joint products and joint byproducts, a good example is a pig. So you take a pig, or a hog, you put them through the production. So the processing, you slaughter them, and then you cut them up into different parts. So a pig may start as a pig or a hog. At the start of the process, you put the hog in the conveyor belt. But then the hog's not going to stay a hog. the hog's going to become bacon, ham, and pork roast. So there's a certain point where they split. They start as one unit, but then they split. And you'll see this in all different types of products, like Hershey's. Hershey's might start as a chocolate, but then it will split into, maybe they'll add the crispy rice, make it a crisp bar. They'll add caramel, make it a chocolate caramel. And then they might just leave it as chocolate and have it a chocolate. So one product can become many. And the way to account for it is, the easiest way, and the way we learn, is the percent of sales value. So the relative sales value, which means it's a logical thing where you take the selling price of each part of it, you find out how much it sells for, and then you assign cost based on how much of the sales is. So let's say bacon. Bacon sells for the most. Then maybe the roast will, and then the ham sells. So bacon's going to get most of the cost based on, you'll get maybe 20 bucks a pound. Where with the pork roast, you only get 10 bucks. And the ham, you only get 5. So the bacon's going to take up, what, maybe 50% of the cost of making all the products. And that's a very simple, logical way to assign cost based on how much you'll get for it. So the most expensive selling item will take up most of the cost. Makes the most sense. Then you also have byproducts, which byproducts, in the case of a hog, the trotters, the snout, and the ears. You may think, oh, those are just the garbage. No, people will still buy those. You can still eat those, use them for different things. So it's almost like scrap, where there's still some value. If the byproduct byproducts usually have a value, so you can capitalize them right there. So you'll take it out of work in process to reduce the cost of the main stuff by debiting byproduct inventory, crediting work in process. So you're actually lowering the cost of production by using these items that wouldn't normally be used. If you don't know, though, how much you can get, or the value is really insignificant, there won't be an entry. You'll just recognize the sale when you sell the byproduct, and then you'll just claim it as miscellaneous revenue, income, and then debit cash. So the chapter, at first it was kind of hard to understand, but it does make a lot of sense once you start doing your problems and you start seeing it done. And I'll draw a little example. I'm trying to get better. I'm getting better at more visual aids, because it helps me too. I'm a very visual learner, so it helps me seeing it in action. Like, oh, okay, that makes sense. So this was chapter 6, just continuing on. So like here, equivalent units of production end of month, 400 units. If, let's say, materials are added at the beginning, then 400 will be 100% of that. But if they're added at the end, and you have ending work in process, 0. None of those units would be done for materials. Now, let's say the ending is 1/4 complete, and 50% of the items are added at the beginning, and the other 50 at the end. Well, then if it's 1/4 complete, it's 50% done. But you doesn't get the other 50% until you hit the 1/2 mark. So that's just an example. Hope this helps. Feel free to leave a comment, ask any questions. If you like the video, you can like it and subscribe, because I'm going to be doing a lot more. This is just the first. This is just cost accounting, so I'm going to be doing every accounting video, every accounting class. So hope this helps, and thank you for your time, and I'll see you next time.